Here's a number that changed my entire trading career: 73%. That's the percentage of time profitable traders spend doing absolutely nothing. While losers are clicking buttons, winners are sitting on their hands. Today, I'm going to reveal why patience isn't just a virtue in trading. It's literally your financial lifeline. The psychology of market patience. While retail traders frantically chase every green and red candle, professional traders understand something profound. Markets reward surgical precision, not manic activity. Think about it. In what other profession does doing absolutely nothing often generate the highest returns? The human brain is hardwired for immediate gratification. We evolved in environments where hesitation meant starvation or death. But in modern markets, this ancient wiring becomes our greatest enemy. Every impulse that kept our ancestors alive now threatens to destroy our trading accounts. Consider the typical day trader: eyes glued to level 2 data, finger hovering over the mouse, ready to pounce on the slightest momentum shift. They feel productive, engaged, alive. Yet statistically, they're hemorrhaging capital at an alarming rate. Meanwhile, the patient trader sits back, observes market structure, and waits for genuine alpha-generating opportunities. The hidden costs of impatience. Impatience in trading operates like a silent tax on your portfolio. Every premature entry, every FOMO-driven position, every just this once deviation from your trading plan compounds into catastrophic losses over time. Let's examine the mathematics of impatience. An impulsive trader taking 20 low-probability setups weekly, risking 1% per trade, exposes themselves to 20% portfolio risk for marginal expected value. A patient trader selecting 3 to 5 high-conviction plays over the same period risks only 3 to 5% for potentially superior risk-adjusted returns. The bid-ask spread alone punishes overtrading mercilessly. Add commissions, slippage, and the psychological toll of constant decision-making, and impatience becomes the fastest route to account depletion. Active waiting, the professional's edge. Here's where most traders misunderstand patience. They confuse it with passivity. Professional patience is intensely active. It's continuous market analysis, structure recognition, and setup preparation without premature execution. Think of a sniper. Hours of stillness, constant environmental assessment, precise target identification, then one perfect shot. Compare this to machine gun tactics. Lots of noise, massive ammunition waste, questionable hit rates. Active waiting involves continuous chart analysis across multiple time frames, tracking institutional order flow and dark pool activity, monitoring economic catalysts and sector rotation, maintaining trading journal discipline, preparing for various market scenarios. The patient trader isn't idle. They're loading the chamber for maximum impact when opportunity arrives. The compound effect of disciplined patience. Warren Buffett's famous quote rings especially true in active trading. The stock market is a device for transferring money from the impatient to the patient. This isn't just investment philosophy, it's mathematical reality. Patient traders naturally develop higher win rates through selective entry criteria. They experience lower maximum drawdowns by avoiding marginal setups. Most importantly, they preserve mental capital for genuine opportunities instead of exhausting themselves on market noise. Consider 2 traders starting with $50,000. Trader A takes 200 trades annually with 55% accuracy and 1.21 risk-reward. Trader B takes 50 carefully selected trades with 65% accuracy and 2.1 risk-reward. Despite taking 75% fewer trades, Trader B likely outperforms significantly while experiencing far less stress and time commitment. Overcoming the action addiction. Trading platforms are engineered to encourage activity. Flashing prices, one-click execution, and constant market data create an environment designed to trigger impulsive behavior. Recognizing this manipulation is the first step toward liberation. Successful traders develop what I call strategic boredom tolerance. They embrace the silence between setups as productive time, not wasted opportunity. This mindset shift transforms trading from reactive gambling into proactive business management. The waiting game, practical implementation. Professional market timing requires understanding market cycles and volatility patterns. Most tradable moves occur during specific market hours when institutional flow creates genuine directional momentum. Outside these windows, price action often becomes random noise. Develop clear setup criteria that eliminate subjectivity. Specific technical confluences, support/resistance, trend lines, moving averages. Volume confirmation requirements. Risk-reward minimums, typically 2-1 or better. Market environment filters, trending versus ranging conditions. When these criteria aren't met, the correct action is no action. This isn't missed opportunity, it's capital preservation. The psychology of doing nothing. The most profitable trading days often involve zero transactions. This concept violates every cultural expectation about productivity and effort to reward relationships. Learning to celebrate the trades you don't take requires fundamental psychological rewiring. Create new success metrics. Rules adherence percentage. Set up selectivity ratios. Average risk-reward per trade. Maximum drawdown control. These metrics reward patience while traditional P&L can reward luck in the short term. Market structure and patience. Understanding market microstructure reveals why patience pays. Markets spend roughly 70% of time in consolidation patterns, with only 30% in trending moves where substantial profits exist. Impatient traders waste ammunition during consolidation, leaving themselves unprepared for genuine breakouts. Professional traders recognize accumulation and distribution phases, waiting for clear directional bias before committing significant capital. They understand that missing the first 20% of a move while confirming direction is far superior to catching falling knives. The compound benefits beyond trading. Developing trading patience creates spillover effects in all life areas. Decision-making improves. Emotional regulation strengthens. Long-term thinking replaces instant gratification seeking. This patience becomes a transferable skill, improving career decisions, relationship choices, and financial planning. Trading discipline creates life discipline. Common patience pitfalls. Many traders mistake analysis paralysis for patience. True patience involves clear decision criteria and decisive action when those criteria are met. Hesitation in the face of valid setups is fear, not patience. Another pitfall is perfectionism, waiting for impossible setups that never materialize. Patience means waiting for good enough, not perfect. The waiting reward system. Markets periodically offer gift setups, obvious opportunities with minimal risk and substantial reward potential. These setups compensate patient traders for all their waiting periods. Missing these gifts due to depleted capital or exhausted attention from overtrading represents the ultimate trading tragedy. Building your patience muscle. Patience develops through deliberate practice, not wishful thinking. Start by extending your typical holding periods. If you usually scalp for minutes, hold for hours. If you typically hold for hours, consider daily charts. Implement cooling-off periods after losses. Mandate minimum wait times between trades. These artificial constraints build natural patience over time. The professional mindset. Professional traders view trading as a probability game extended over thousands of trades. Individual trade outcomes become irrelevant. Process adherence becomes everything. This long-term perspective naturally cultivates patience. They understand that capital preservation is profit. Every avoided loss is earned money. This reframing makes patience profitable rather than painful. Conclusion: the ultimate edge. In a world of high-frequency algorithms and split-second execution, individual trader advantages seem impossible. Yet patience remains the one edge technology cannot replicate. Algorithms can process data faster, but they cannot wait better than a disciplined human trader. Your patience is your alpha. Your discipline is your differentiation. Your ability to sit still while others panic is your pathway to consistent profitability. The market will always offer